welcome back to Block TV. And wow, Q1 of 2020 is over and it was a wild ride to say the least. And to help us break down Q1 of 2020 is Bobby Ong, founder of Coingecko. And today we're going to be speaking about Coingecko's Q1 2020 report. Bobby, thanks for joining us.
Pleasure.
All right, so Q1 2020 was bad for the total crypto market, but just how bad was it?
Yeah, we recently published our Q1 report. So it was a lot of things. So let me just go through how bad was the Q1. So actually, if you look at the stats, Q1 actually didn't perform too bad on a quarter-on-quarter basis. From the start of January to the end of March, we only contract about 5%. We had a very good start to the year. If you look at total market capitalization, it went all the way up to close to double, up to close to $300 billion at the start of the year till mid-February. And then it slightly declined, and then up to the 12th of March, we had a Black Thursday where the market actually crashed 40%. So that was a big day. It shows that the market is actually quite correlated with the S&P 500 and was quite badly impacted due to COVID-19. I think in terms of coins performance, we saw there was a surprise in the top 5 cryptocurrencies. Bitcoin SV was a big surprise of the year. So we started the year, went up 350% at the start of the year, mainly due to Craig Wright's rumor that he has the private keys to Satoshi Nakamoto's Bitcoin holdings. And a lot of people bought into the rumor, but he was supposed to show evidence of it in court, but couldn't produce, and it sort of dumped throughout the remaining quarter. But it still showed a 70% gain in first quarter. Everyone else, Bitcoin, even though it had a 40% decrease during Black Thursday on 12th of March, only declined about 11%. Ether actually saw a 3% gain throughout Q1. So it's been a quarter that we really want to forget, mainly because of 12th of March. But otherwise, if you look on the bigger picture from a longer time scale, it's actually not too bad.
Mm-hmm. Now, Bitcoin, Bobby, Bitcoin lost market dominance over this. You mentioned BSV, gained a lot. Bitcoin is actually down. Who were the big gainers that Bitcoin lost market dominance to?
Yeah, so if you look at the market dominance, Bitcoin actually lost about 3.5% dominance. It actually, the main gainers actually from quarter one was the stablecoin. So Tether gained a 1.1% dominance in quarter one, and mainly because on the 12th of March, there was a flight towards liquidity. Everyone was selling altcoins and moving towards stablecoins to preserve capital.
Mm-hmm. So the stablecoin game was more just a reaction by investors to kind of hold out or wait out the storm and protect investment?
Yeah, that's right. That's right. A lot of people, it was a flight towards liquidity, and we saw everything went down. And we even went through a section towards the end of the report where we even saw the gold, which was traditionally seen as a safe haven asset, during this crisis actually went down. During the sell-off as well, due to people selling off any liquid assets to fund the margin calls for the other assets.
Mm-hmm. Now, what we're seeing, on the screen is the biggest winners and the biggest losers. Who was the biggest winner or the biggest gainer in Q1?
Yeah, so just going to talk about this. So this is a slide of the top 30 coins performance in Q1. I think the biggest winner I've mentioned just now was Bitcoin SV, went out 70%. But the second close gainer in Q1 was OKB token. So it went up 65%, mainly because of OKX launch of OK Chain testnet, as well, mainly driven because OKX decided to announce a large burn of 700 million OKB. These are unissued OKB. The issued OKBs in market was around 300 million. So this was about 230% of OKB that they promised that they will not issue, and this kind of drove a large increase in value of OKB. The coin that lost large value in Q1 was actually Cosmos. This was no surprise because the Cosmos team saw its co-founders fight, and 2 of the team members left. So Jay Kwon left Tendermint Labs, and Zaki Manian had internal disputes. So they both had very public fights, and nobody knew what's going to happen with Cosmos. So there was a huge down in price, 54% down in Q1. The other big loser for Q1 was Maker, MKR. So it went down negative, went down 33%. This was mainly due to the Black Thursday issue. So there was liquidity issue with DAI and MKL. A lot of people's their holdings were liquidated. So because of some problems in the MKL and the maker, and then they had a negative 33% decline in price.
Mm-hmm. Now, during that, you mentioned Black Thursday, a lot of volatility. Trading volume took off, was very high in Q1. Which platform or which exchange actually had the most volume during Q1?
Yeah, so talking about exchanges, let me go through some of the things. So we did a study on the Bitcoin derivatives, Bitcoin perpetual swap derivative markets. What we saw was that Binance futures gained a huge market share in Q1, and if you look at the derivative market, there was a huge increase on the 12th of March in trading volume. So Binance trading volume for Bitcoin perpetual swap increased 15% on a quarter-on-quarter basis in terms of its dominance. So it actually took market share from BitMEX and all the other main derivatives exchanges. But even though Binance gained dominance for trading volume, if you look at open interest, actually BitMEX still has the majority for open interest at 47%. If you look at open interest, even though trading volume spiked, open interest went down rapidly on the 12th of March. And I think, I have some stats here. So for spot exchanges, so if you look at the spot exchanges, this is trading volume for the Bitwise 10 real volume exchanges. You can see this chart is from 0 to $6 billion US. But for the 12th and 13th March, trading volume spiked all the way up to close to $11 billion, and we couldn't chart it up here without skewing things too much. So we had to cut it off and display it here. So you can say that trading volumes almost doubled on the 12th and 13th of March due to the volatility. And if you look at the chart, if you look at the volume based on Bitwise 10 real volume exchanges, you say that Binance actually dominates 50 to 75% of all real spot volume trading. And what we also found was that we look at the web traffic estimates, and Binance was by far the most popular exchange. It collected 66.6 million page views over Q1 in January, February, and March. And this was almost 4 times larger than Upbit, Coinbase, or Bitum, the next largest spot exchanges. BitMEX was a derivative exchange, and it did pretty well at 15% market share for web traffic.
Now, the interesting thing on top of that, besides Binance's already established website volume, website traffic to their site, they also purchased a CoinMarketCap, or acquired CoinMarketCap, which also has a large web traffic presence. Do you think that combined effect, will you think that will combine, that will increase web traffic, or will that take away?
Yeah, so I mean, they are 2 separate properties, 2 separate domains. So this is actually web traffic for Binance.com itself. But yes, I agree that it depends on what Binance plans to do with this acquisition. And if they start funneling more traffic over, so we will see that Binance will solidify its position. At the very least, it will be a defensive mechanism for them, so that no one else can use the new property to funnel traffic to the exchange. So at the very least, it will work for their future benefit.
Mm-hmm. Now, Bobby, I want to speak to you a little bit about Coingecko. You guys actually released How to DeFi. You want to tell me a little bit about that? And I'll bring the screen back to you so we can see you. But you want to tell me a little bit about the release of How to DeFi by Coingecko?
Yeah, so How to DeFi is a book which we wrote, and we just published it a couple of weeks ago, where it's a beginner's guide to decentralized finance. It's a 200-plus page book with 26,000 words, basically going through the entire explanation of what decentralized finance is. Basically, it talks about the different types of decentralized finance, such as decentralized exchanges, decentralized lending platform, decentralized insurance, and so on. And we also went through a step-by-step guide of how to use some of these platforms, because these platforms can actually be quite complex to be used. And we found out it was relatively hard for us to use at the start. So we wish there was a guide, like a one-stop place for us to get all this information, and we sort of wrote this book. So yeah, the book can be downloaded on Coingecko website. You can see it. We're kind of making it free up to the end of April. After that, there will be a charge of $14.99 after that. But yeah, this is basically a book which goes through all the different aspects of decentralized finance.
Now, is it geared towards someone who doesn't understand these technologies at all, who's new to the crypto sphere, who's new, or is this more for developers and people who are more tech savvy who want to get a real deep financial understanding of DeFi?
Yeah, so this is geared towards non-techies. So there's no technical aspects of no code involved in this book. It's more geared towards people who have some familiarity with crypto but do not know anything or much about DeFi. So it's really targeted at the beginners, I would say.
Mm-hmm. Can't wait to read it. Now, you guys also in Q1 launched Coingecko Earn. You want to tell me a little bit about that?
Yeah, so Coingecko Earn is basically a feature where, if you look at the market, what we noticed was that there's a lot of platforms that recently have interest earning products. And what we did was that, so let me share my screen right now, is that we created an aggregator to kind of compare all the different return rates from the different lending platforms. So for example, if you have Bitcoin and you want to get some return, so you can see that Celsius Network's offering about 4% on per annum on your return, and you have a calculator where you can put, if you deposit 1 Bitcoin on Celsius, you can see that you get 1.22 after 5 years if these interest rates are maintained. And we sort of track this for all the other coins. And let's see. So one of the most popular coin is DAI, which is a decentralized stablecoin. And we see that there's a lot of decentralized lending platforms. So like Stake.Earth, Nexo, Celsius, Compound Finance offers a lending platform, and Aave, DeFi, and so on. So these are some of the platforms which offers a return on your DAI stablecoin, and we sort of want to have a way for us to really easily compare all these different return rates. They also have some of these other information, such as any security audits that these companies have done, and any of this amount that is locked into smart contracts to see how popular they are.
Mm-hmm. Now, this actually looks like an excellent tool. I know that when I was actually searching to invest in different or stake different coins and get some interest, it was a little confusing. So I actually haven't got a chance to check that out. But after this interview, I will check it out. It looks very cool. Now, to wrap up Q1, we went through the numbers, we went through the hard data, but I think the biggest crypto drama of Q1 had to be Justin Sun taking over Steam and then the Hive forking off. How did that end? Because we spoke about this last week or 2 weeks ago when we spoke about how it happened, but where does that hold now? Who's in control of Steam and how's Hive doing right now?
Yeah, so I think, so the last time we spoke, I think I sort of went through the drama where Justin Sun purchased a stake in Steemit Inc. And then people were not really keen, the community was not really keen on Justin because he wanted to use the Steem that is owned by the company, which was supposedly, there was a soft promise not to use this Steem for governance purposes. Then the community sort of triggered the war, and they sort of did a soft fork on the code to limit Justin Sun's use of the Steem tokens. That got him really angry, and then he kind of worked together with Binance and 4B to do a hostile takeover of Steem witnesses. Maybe he tricked the Binance and 4B to use user funds, but a couple of days later, the CEO of Binance, CZ, realized that he was wrong, and they withdrew their vote, but the damage has already been done. And we also look into it, and so the disgruntled holders, the community members, were not happy that Justin Sun is still in control, so they sort of announced a fork. So they create this new coin called Hive, and basically they airdrop the tokens one-to-one. So everyone who has Steem tokens will get one Hive token, except those stake held by Steemit Inc. So Justin Sun wouldn't get these new tokens. Binance and 4B announced that they would support this split and honor the airdrop. And on the 20th of March, Hive actually launched, and it launched very successfully. And at one point in time, it was actually quite interesting. Steem and Hive had a higher price and market capitalization and almost double that of Steem. So we thought that was the end of the drama and things will end. But on the 4th of April, Justin Sun actually froze the Steem tokens held by several witnesses in a tit-for-tat move against witnesses involved in Hive. So sort of, I mean, he shouldn't have done that in the sense that there was no reason to freeze tokens that are owned by witnesses, but it just shows that you don't know if your tokens are free or you could lose your tokens one day if Justin Sun decides that he doesn't want to be your friend. So that's sort of the drama that's up to on the 4th of April. So far, we don't know what's going on next. Hopefully things will die down because these guys go their separate ways. But I think an interesting point to note would be to see how much the price of Steam and Hive continue in the following months. Will we see Hive take off and continue to have a high price relative to Steam, or will we see Justin Sun like turning things around and building Steam after getting rid of all these toxic members of the community as he claims, and growing the Steam community as the way he sees it to be. So I think over time, it will be clear who has the more active community, who has more postings, who have more development. It's still really early days at this point in time, and it's all speculation.
Mm-hmm. I do think it makes a really fascinating case study because, Justin Sun is definitely, an interesting figure in the crypto sphere. There's a lot of opinions out there for him. He's very outspoken. And here's an opportunity where we get to see, because of Steam, the way it is, it's a content platform. It really, you can't force its way to success. It really is dependent on the community. So this is a perfect opportunity to see, what wins out here. Is it the community if they go with Hive, or is it, Justin Sun and his powerful presence if he'll be able to make that a success? So that was looking back at Q1. Give me real quick, what is your predictions for Q2 for the crypto sphere? Give me, especially with the halving coming up for Bitcoin, what's your take?
Yeah, so I think it's an interesting time. Q2 will be, you will see Bitcoin going through its halving. This is a much anticipated event. It's happening sometime mid-March, supposedly coinciding with CoinDesk consensus conference, which should now be virtual. So a lot of people are putting high hopes on the halving having a price increase. I certainly hope so, but we don't know if the halving event has been priced in. Certain reports have shown that the halving event has actually been priced in when we saw Bitcoin price went up to $12,000 last year, and they certainly saw this case with Litecoin. And Bitcoin Cash and Bitcoin SV saw its halving happening earlier, a couple of weeks ago, and there wasn't much price changes. So maybe Bitcoin's halving will be the same, but it's hard to say at this point in time. But in terms of predictions for Q2, I think we'll see a lot more decentralized finance apps coming up. I think there'll be a lot more things, a lot more hacks happening as well, which puts in place users will start realizing that DeFi is not all a bed of roses. There's a lot of these things that can be hacked, but it also brings up a lot of interest in security for this DeFi. And also we'll see an increase in decentralized finance, DeFi options, DeFi insurance to protect against people who have stake in these lending platforms. So yeah, I'm expecting a growth in DeFi, and I'm expecting a growth in decentralized options as well. We saw Binance launching options, so also I think in terms of centralized options, we'll start seeing a lot more exchanges start launching their options platform as well. So that's something to see. I think Q2 is definitely a time when all these options platforms come out. Will also be interesting to see how OKX and Huobi launching their OK and Huobi chain. So still quite uncertain what's their plan. Binance, of course, just announced a Binance Smart Chain, which is supposedly a plan to compete against Ethereum with its virtual machine. So I think Binance will be aggressively trying to push teams and developers to move over from Ethereum to Binance by offering Binance Smart Chain, by offering incentives. It'll be interesting to see if any of these developers who can't get any much traction on Ethereum move over. So, and then we'll see if Huobi and OK does have this similar strategy with Binance.
Mm-hmm. Well, Q1 definitely saw maybe a once-in-a-lifetime event, especially with the COVID-19 virus pandemic facing the world. Q2, we'll see how it shapes up, especially with that Bitcoin halving. Thank you so much, Bobby Ong, for filling us in on all the latest and greatest that happened. And for all our viewers at home, if you want more on cryptocurrency, tech, and blockchain news, make sure to check us out at blocktv.com.
Watch us on Amazon Fire TV and Roku.